Hey everybody, DayTraderRockStar here, and today's lesson plan is how to trade pre-market poppers. I also call these low float poppers or flatline poppers, and they have certain underlying characteristics of this. The common denominator, typically low price stocks, and we trade them in the morning on news. Now, as a trader, as a full-time trader, I've traded many different ways, but I've really, over the years, have just narrowed my criteria down to certain things that I work over and over again. And that's the real key to success in trading, is not to overtrade and only pick trades that are in your favor. So that's why we stick to divergence plays or multiple indicator setups, quad rotations. You've been seeing me put out those video lessons on quad rotation, how important that is for futures traders. And this is for stock traders. This is a very important area where you can make a lot of money if you stick to the criteria. I want to kind of give you that cheat sheet, because we've been doing it every day, and you can see the opportunities are there every day. Now, it's not everyone's cup of tea, so to speak. Not everyone wants to trade penny stocks. I'm not even a big fan of trading this. I call them scams. You know, I might have these words for them. You might hear me on the radio when I'm trading every day, DayTraderRadio.com. But you should know that, because this is a members video, a members lesson. But we know what the gig is up here. I mean, they're cheap for a reason, but it doesn't mean they can't move 30 to 300%. And these are the ones that typically move 300. You know, if you're going to get 300% move or a three bagger, it's going to be this type of setup. And we could actually put, really put this time frame. It's an exact time frame when these stocks come out. So we're going to learn about those today. It really is a technique that I like to use pre-market. It's a pre-market technique. We'll talk a little bit about pre-market hours. We're going to talk about the two setups that we want to take in this environment. I want to show you how to do some scans. I want to show you how to find the news fit quickly, and I want to show you the anatomy of a typical pre-market popper. You know what typically happens with this, because I see this and I study it, and I've been taking screenshots of the same setups over and over and over again, and it's very easy to call it during the day. So we watch these and I circle them, and if you watch the show anytime in the morning, we're in there pretty early. I'm in there about 7:30, and pre-market actually starts at 4 o'clock in the morning. So let's just actually start off and just kind of go to some of the things that we like about the low float poppers or flatline poppers. All right, first of all, this is a trading time frame that we want to pay attention to. Typically, I'm in at 7:30, so we're going to say 7:30 to 10 a.m. But the pre-market starts at 4 a.m. 4 a.m. with quality name, quality brokers. We're going to discuss that in a second. But make sure you're able to trade pre-market. If you're not able to trade pre-market, then you're going to miss a lot of these setups. You're going to miss all of them, because these are the object here is pre-market news, momentum, no halts. Everything is kind of the Wild West, but it's really a momentum-based trade. So quality of news comes first, the volume comes next, and then we're going to show you the setups off of that. All right, so let's just get back here now. So again, remember, this is from 4 o'clock to the open at 9:30, and we like to go past the open, because the stocks that are consolidating strong into the open tend to pop. All right, so we kind of extend that trading time frame. So you could really say it's 4 o'clock to 10 o'clock or 4 o'clock to 10:30. Anything would work like that. All right, so let's take a look at the pros and cons here. All right, the pros. Abundance of news and catalysts. So in the morning is when the news gets released, and these cheap stocks that tend to have low floats, because for whatever reason we kind of look. That's one of our criteria, is the lower the float, the better. Some of them might have bigger floats than others, but usually the lower floats they can move much faster. So there's an abundance of news. Most of the companies put out their news. Sometimes they put them out at 4 o'clock, right at the market open. Sometimes it's 5, sometimes it's 6, and it goes on. But if there's any news for the day that a company is going to release, that's not breaking news, it will be released pre-market at one point. Maybe it's the 5 o'clock hour, maybe it's the 6 o'clock hour, maybe it's the 4 o'clock hour. But those are going to be your catalysts, and we need a catalyst to trade. Our profit potential is very high. 100 to 400% moves are common, and yes, they are. It's hard to believe that, but you're talking about a stock that was maybe $1 that goes to $4, or a stock that's 30 cents that goes to 90 cents. It's not hard with these stocks, and they run. So that's a great pro for, that you're not going to get those returns normally during the day. You're going to get them pre-market. So if that's kind of something you want to look for, you're going to have to get up early. So there's a great risk reward ratio. And the reason I say that is if you catch these things early enough, they tend to be penny stocks. They tend to be under $1. A lot of them on the criteria just show up. They happen to be under $1, and you have a limited downside. Doesn't mean you have to go all in. I typically, if I could get 300, 400 shares, get 30%, or get a stock at 70 cents and trade it to $1, right? That's a big percentage move. And I take that off with 300 shares, I made $100. In the worst case scenario, the company goes to zero, and I'm only holding 300 shares, and it's less than $1. So it's like the risk reward is really good here. Low price stocks typically under $5, most are under $2, and that's good for people that have less capital. Low price stock is easier to pick up. You can pick up a little bit more. It's a little bit more dangerous, but most of these stocks that we deal with are going to be under $2. Live pre-market stock scanner identifying early moves. Now, during my show in the morning when I'm here trading this, I have a scanner that's on our screen, and it tells us. I have it set up, and I'll show you the criteria in a bit. But I have it set up searching for the stocks that are triggering our news, volume, price, float. All those things are checked off, and then they'll pop up on the scanner, and we're able to see them right away. All right, lots of times we come in, we already have a list of those stocks that have already been moving up since 4 o'clock. And so we're going to talk about that. The cons, the negatives, fast-moving explosive movers, you have to be quick. Lots of times you'll get a fast move, the stock will already pop 30%, 40%, and you chase it, and the rest of the day it kind of grinds down. And you kind of get trapped in a lot of these. You have to be very careful on that. And we're going to talk about, what the criteria. We're going to keep you out of these. You don't want to get into every one. You want to get into maybe 20% of them. Not of all the news, maybe 2 out of 10 are going to be the real deal, maybe 3 out of 10. And that's going to be determined by typically news and volume. All right? Explosive volume, big volume is really important. And the quality of the news. It can't just be. I would stay away from clinical trials. I would stick to more or preclinical trials. Things that are not tangible. Or something written up. A lot of this stuff. They pump it up. They'll say that we're using AI now on our website. We're using AI. And they've taken advantage of this. And they get these pops, but they tend to sell off. So be careful on those. Most trades should be taken off the same day. Out of all these trades, all right, all these trades, I would say 80% of them fade off, fade by the end of the day. 80%. So you have to really be very careful on what you pick. I'm probably scaring you out of a lot of these trades, but there is, the criteria that we have is going to keep you out of the mess, and it's only going to put the good ones in front of you. All right. Pattern day traders. So those are trading under the $25,000 FINRA threshold, non-margin or margin account. You can only trade 3 trades in a 5-day period. This is a very hard thing to handle, because if you're going to get in and out, you could blow all those trades in one day looking for that runner. Or if you want to lock in a profit, you tend to want to lock in profits on these. So it's good to have unlimited trading ability, because you want to be able to get in and get out. You really do. You don't want to be trapped. You don't want to be feeling pressured. You don't want to say, hey, I don't want to burn a trade here. I want to hold on to this and watch it grind all the way back down. You want to be able to get out on these pops, because I'm going to show you when these stocks are going to pop. You're going to get decent, usually a 30% pop. Now, if you're fine with taking that off, 30% would be great for anybody. Like, hey, I could guarantee you 30, not guaranteed, but you could make 30% on 30% on the next move. Wouldn't you? I mean, that's great. You would take it off. But a lot of people have to kind of like, well, I want to try to hold this until tomorrow so it doesn't count as a trade, and it won't work. Over time, these things, most of these fade. So if you want to do it once or twice, be picky on your setups. Make sure the criteria fits. We're going to go over that in a second. Early morning hours could be hard for some people. All right. Again, this works from 4 o'clock to the open. So it's really the early open. It could be good for Europeans. Other people out there around the world is not affected. Not really, probably not really good for Hawaiians. But depending on where you are, but you have to make a sacrifice. I always say you have to go where the money is. If there's opportunities here and it's easy to pick these off, then you get up and you do it. That's easy enough. It's just like doing anything else. You get up to go fishing early. You get up to do certain things. You get up, you sacrifice. But that's it. All right. So next slide here. Pre-market starts at 4 a.m. That's 4 a.m. Many brokers do not allow trading that early. A few start at 7 a.m. and a few start at 8 a.m. and some don't even allow it to those. Oops, I gotta fix some of this. I'm sorry if some of the. See, I missed an E here. Those traders have started at 9 a.m. So that's important. That's kind of a little tip there. You have to know where how you're going to be able to trade pre-market. What brokers? I use Interactive Brokers, and it enables to trade anytime, anywhere, any place. It's really good. Interactive Brokers, I consider this best for all-around trading. I'm not 100% sure on the other ones. I do believe Robinhood starts trading at 9 a.m. They might have moved it up a bit, but this gives us an advantage because you'll notice when we get in the morning, I'm trading the pre-market poppers. Usually on the whole hour, like 8 o'clock and the 9 o'clock, you'll see certain stocks just pop. And these are new brokers that are opened up. And what's going on is the people are in Fidelity or they're in Webull. Well, Webull I think is now 4 o'clock, but like Robinhood or Ameritrade, Fidelity, that doesn't allow 4 o'clock trading. They're waiting there. They're doing their scans, and they're finding these same stocks we're finding. And the object of these traders, they want to get into the very active momentum stocks. So when they're able to trade, say at 8 o'clock, 9 o'clock, they're going to go into the big volume leaders, these cheap ones, and their orders are going to go in, and they tend to get a pop, and cause a pop in these stocks. So it's a good technique to use to take advantage of, traders who are not able to trade. And you see that all the time on my chart. All right, so this is what we're looking for pre-market. So you're going to have to do your own research. Like I said, Interactive Brokers, this gives me no problems. I'm not familiar with the other brokers, but make sure you're able to trade. 4 o'clock is going to be the earliest, but you want to be able to trade at least 6 o'clock, 7 o'clock, 8 o'clock is kind of late. A lot of these things are already moved. All right, next up here. Criteria for best opportunities in the market. All right, this is my fourth things, the criteria that we're going to concentrate on. Number one, it has to have good news or a news catalyst. The better the news, the bigger the move. News gets released typically between 4 a.m. and 6 a.m. Usually by the time I get into the office, the stock has already moved up 20%. So again, if you're in front of it, 4 o'clock and the news comes out, you can get in pretty good. The techniques I'm going to show you are if you're getting into the markets a little bit later and you're starting to find stocks that are hitting your scanner, which means that those stocks are up 20 to 30% already. How do you know those are the ones that are going to be up 100% by the end of the day or 60%? That's what I'm going to be showing you. There's a whole different world getting in at 4 o'clock and trying to just jump on the first news you hear. You could get good position. You could get a good position. You could have a home run, but you still need the news and a great catalyst. So the better the news, the better it is. And then the volume. Volume is key. Bigger the volume, the better the trend. Should be massive. I put a kind of a benchmark like 1,000% of the average daily volume. I tend to recognize as a good um, a good indicator of that stock trending most of the day. So the bigger the volume, like a big percentage gain over the daily average volume, that's the key. So look for that real massive. You might think 200% volume, 300% is a lot. I'm talking thousands, at least 1,000% volume, daily average. Once you have that volume in there, that shows up on everyone's radar, and people just start to get attracted to it. I call them sharks. All right, and I call them the sharks. These are the trades, traders like you're going to be doing, looking for these moves, looking for, most of the people are not going to be trading. We are. We're going to be kind of setting traps, understanding how the trade sets up. We're going to be looking at the anatomy of the trade and taking just two positions that fit the criteria. All right, that's what this video is about. But you're going to see that many of these are going to be based off the high volume, the highest volume ones, usually the volume leaders. When you get in the morning, do your scans for volume. Highest volume pre-market leaders are typically the cheaper ones. Low price stocks attract the sharks. High percentage gains are common with stocks under $5 with these strategies. All right, we've kind of talked about low float. Investors typically consider a float of 10 to 20 million shares as a low float, but there are companies with floats of less than 1 million. Some larger corporations have very high floats in the billions. You can find even lower float stocks trading on over-the-counter exchanges. So again, I use the FinViz lots of times to identify what the float is, and my trading software, the TC2000, has a float counter on it too. So I kind of have that as one of my columns, which I'll show you. All right, lots of times these stocks are announcing what we call reverse splits. Instead of a regular split, like if you had 20 shares of Apple and they split 4 to 1, four for one. Well, you get 4 stocks for every 4 shares for every share you have. Versus a reverse split is if you had, say, 1,000 shares, and they did a 1 for 10 reverse split. You would only have the price would adjust one. It would go up, but your shares will come down. So instead of having 1,000 shares, you'll only have 100 shares. So lots of times the low float's going to, it's going to eliminate the float, or actually the reverse split is going to eliminate the float to make it much smaller. And these stocks tend to move about a week to 2 weeks later. They start to squeeze higher. It's easier to move them. It's something I noticed. All right. Now we're going to get into some of the examples of what we were just talking about. So we got news, catalyst, high volume, low price, low float, and we're going to give you examples. But the first thing I want to do is show you the anatomy of a trade. I put this together. This is a typical trade, a stock that you'll see during the pre-market hours. I don't know if you can see this. This like yellow area represents 4 o'clock to 9:30. It represents the pre-market hours. And you can see here, this is 4 p.m. So this would be 4 a.m. right here. And this is probably around 7 o'clock. Something came out. You could probably put your. Oh, I can't do it right there. Let me move back here. So anyway, news came out and it popped. And like I said, sometimes you might be there. Sometimes you're not getting in until around here, and it's starting to pull back. So lots of times I want to get in, and you're already going to have a pop, and it's either going to start to consolidate, continue to move a little higher, or go sideways, or start to pull back. There's really only 3 ways you're going to go. All right. So when we get in, these things will be on our scanner because of the volume, because of the percentage move. A big move like this, 75 cents to up to $1.25. Nice. We just call that a double. That came off of actually underneath 75. It was almost like 50 cents. 50 cents, it went over $1 here. So you could easily see that doubled up right there. Pushed up a little higher, probably up 130% before coming back down. Now, That's what we call a news event initial pop. The second thing that's going to happen, what I want to see is, first I'm going to analyze the news. Hopefully it's good news. You kind of play that by ear. You kind of look at the volume. If the volume's really big and it seems like it's starting to, the volume is good, a high percentage based on the previous volume. News looks okay. Then we're going to be watching the 20-period moving average, which is this little green line. Now I have the 20, 50, and 200, but I'm only paying attention to the 50. To the 20. So the 20-period movement, as it gets down to that level, this is probably where I want to start to take my position. Now you can maybe wait until start to see a little bullish flow here, maybe a turn up on the stochastics or just a better candle starting to move back up. You could do that. Or I would just recommend buying into the 20, because buying into that weakness, long as the news is good, you're probably going to hold the 20-period moving average. If you got it, again, if you just get in, and the next thing you know, you're here, you're in the stock at the highs of that candle, and it starts pulling back, you're just going to probably bail thinking, oh man, I just got trapped, not knowing it's going to go back up. Most of these stocks are going to pull back a little, and they're going to hold that 20-period moving average, and they're going to move up. So the first entry is good quality name, good volume, first pull back to the 20-period moving average. We get in it. Lots of times it sets up just like this. I'm going to show you examples of this. Second setup here, and this is pre-market. We push back up to the pre-market, those highs. The breakout of highs is another catalyst. Anytime you break out of highs, that's a super positive, super positive, because typically you get the initial pop, and then all the sellers come in thinking, oh God, thank God I can get out of this piece of crap, and it drifts all the way back the rest of the day. The ones that come back and take out those highs are telling you something, and that typically is going to go much higher. All right, so you got to break out on the highs. So watch the breakout above the highs in the pre-market. And then the next level we're going to do is the 9:30 open. Now, if you're consolidating into the open, and when we talk about open, that's 9:30 open. There's a lot of people out there that don't even know they could trade pre-market. And they think 9:30 the market opens up. Again, they're going to be looking at the same thing with those pre-market. I mean, believe me, I run a show here. I run a trading site. And throughout the years, I've gotten that question. And it's not a stupid question, just it's a beginner question. How do you take in these trades pre-market? Someone asked me. They ask me all the time. How'd you get that trade in? I said, well, that's pre-market, Oh, I don't know how to do that. Well, I said, what broker you have? And typically they have a broker that does not allow it. So I always kind of say, hey, get a broker that allows pre-market trading. You're going to give yourself so much of an advantage in this market. A lot of people are going to come in at 9:30. They're going to be scanning, getting ready. The 9:30 bell opens up, and they're going to go for these stocks that are leading on the pre-market volume list. And these are the ones typically pop. Now, the pop comes, all these orders come in, usually pops, all right? And guess what? These people here, this person here, this person breakout player, are selling now. And that's probably, I always say 80% of the pre-market poppers give up and fade at least 50% back throughout the day. And this is, again, very tough to get, unless the news is good. And in those cases, you're going to continue to hold the 20-period moving average. But I'm just showing you 3 opportunities here. Well, 4 if you include getting up and being in front of the news, or being right there at the news, you might be able to get something good. But the first pullback on good news is key. The breakout of the high, pre-market highs, key. And the 9:30 open, all right? And sometimes even the 9 o'clock area, or the 8:30, some brokers, kind of do your research, find out when these brokers open up. And when they open up, you'll see a kind of surge of volume hitting some of these stocks. And it'll give you a nice little move. All right, so that's our anatomy of a low flow popper. Initial pop, pullback, breakout, and then eventual fade. Now, of course, we could use stochastics on these type of trades too. If you did notice, this was a high, this was a higher high, this was a high, this was a lower high. So this was a nice divergence, and that's what you want to see. You want to have a divergence with volume. You don't want to have a divergence without volume. This is really good volume. I would count divergences on a cheap stock as long as there was good volume. Typically, it's real sporadic, and those divergences. But if it has really good volume, it's telling us something. This is a real stuff. This is a real action here. All right. So, what's news? News determines everything. Real great news needs to have an obvious great vibe to it. Some news is just BS and used by fraudulent companies to pump their stock. News that attracts. Oops. I think I probably I should have done a spell check on this, but I wanted to get this out today. I didn't do a spell check on everything. I'll fix those though. A lot of volume right now, but when I get into it, I scanner. News comes out. I just want to show you my news source. We use Benzinger. Mr. Land, Charlie, does a great job on our dashboard, and he gets to work pretty early. He's usually broadcasting around 6 o'clock, and that's key. Just having an audio squawk news is very key on identifying great setups in the morning. So that's one way of doing it. That's on the members. That's on your dashboard. Another thing is I use TweetDeck, and TweetDeck is just something that Twitter puts out, and you can put in whenever there's news out. First of all, I want to see my scanner show up. My scanner is going to show me what that stock, and I'm going to get in. And the first thing I'm going to do is I'm going to bring up the chart, look at the chart, see where the price is, see where the 20 is, go through all my stuff that I was just talking about. Then I'm going to throw it up on my TweetDeck, like INXP or ABBV. I'm going to put it in there, I'm going to search, and it's going to tell me the news. Because there's thousands and thousands and thousands and probably millions of people out there trading and news sources and stuff. And the way that you can do the search with the dollar sign is very easy, and this stuff is instantaneous. So if I see INPX moving, I'll jump in it or I'll look at it and see what the news is. It'll just take me a couple scrolls to see that. I'll just scroll down. So I love Twitter for that. I think it's a great source for news. It's TweetDeck. All right. So the second thing we want to do is to pull back to the 20. All right. Most times it will not be in front of the news, and by the time you see the stock showing up on scanners, it's usually up 20 to 30%. These stocks continue to make new highs. 80% of them hold the 20% EMA. So again, a stock that holds the moving average here has a good shot of actually breaking out to new highs. So I'm showing you some examples. You get the pop, you get the pullback. All right. Let's see if I have any other. And again, these are trades that we've been taking over the last couple months. So I see a good setup. Typically what I'll do is you'll see a yellow circle, and a yellow circle, orange circle, represents a real-time call on that stock. All right, anything that is a yellow circle, I want to make sure that we don't put those in after the fact. So I always look back at my charts and say, oh, I was looking at it here, or this is where I identified it, and we come back, we look at it, and we see how well it works. So you'll see that on a lot of my charts. You'll see that going forward on a lot of my charts. I keep these things here. I want to know if I'm right or wrong, or why was I looking at it, or maybe I just want to track it. I may have found it for the first time. Let's mark it off. That's typically what I do, is mark it off. If it's at the highs, then I'll just start doing other scans, and then I'll come back to it, and we'll see where it was. So here's an example of that. So Sober Safe. This is a stock that we traded just last month, and it was called a flatline popper, meaning that it didn't have any news yet, but I identified it as a potential stock that will, it doesn't have the volume, but it has this flat line, and I'm looking for stocks that haven't really gotten those big pops from that went from $1 to $1.40, $1.50. They've been $1 and $1, and they've just been sideways and flat for so long. Eventually, everyone gets not taken out, but they'll throw some news out there, and the sharks will come for it, and it'll start to run. So I like to get in before the sharks find it by just doing visual scans of these cheap stocks and writing them down, and then seeing the float, making sure the pattern looks good, and then I'll take a few hundred shares. And what we'll do is we'll find big moves in these things. This one went from 120 to 160. Well, this one actually popped. We circled it out, but as you can see, it came down to the 20, and that's probably where you want to be buying on it. Now, I ended up, I think, selling into this because I was in it before, and that's great. When you're in it before and you get the pop, we could sell it. But it's holding the 20, 50 period moving average here. It popped back up. Once it got back, this is actually a nice little pattern here. We kind of got up to the high, back up to the high, back up to the high. Whenever you're testing those highs, and we're kind of holding that 20, that squeeze, and you know that's going to go, and that's what happened with that one. Talk about the news, the pullback, and the first breakout after. Well, this is actually coming in after. This is the pre-market section here. This is during the day. But the important part is the breakout. I wanted to point out the breakout of pre-market above pre-market highs. So this is going to be the highs of the day, and that breakout really gets it going. On a cheap stock it is. These breakouts on cheap stocks work better than on big stocks. Oh, let me back that up. All right, so all right. Here was one Hillstream Bio, pre-market pop, first pullback to the 20. Actually, kind of came back here, chopped around to the 20. Don't matter. Don't worry about these big candles. These are just bad prints on this chart. The TC2000 is not great with their prints. This is not a trade. It wouldn't take you out here. But that's a good hold here, especially right here. I think that's where we announced it. And I do believe that continued to move higher. I just wanted to point out that, again, I was looking at these real time, and once I see them, I usually copy them because they're good examples of the textbook, it's an anatomy of a textbook trade. Pre-market pop, the pullback to the 20. This was a great one in Peloton, and I remember seeing it, and I didn't take it, but I did mark it off. So it popped on some news, it pulled back to the 20. You could see it was closing, and again, just worry about the closing price. Don't worry about if there's big candles and wicks and stuff like that. That could be very, that's probably not real trades and stuff, but it's really about the closing wick here. So we held at 20, and it kind of just held at 20, and then at 9:30, market opened up and everything took off. And again, the 9:30 consolidation consolidated into the 9:30 highs. This was also, I believe, an earnings news or earnings play and stuff. Peloton. That moved up nice. I didn't want to even get involved in that, but I remember writing that down there. Red wire. All right. The Pennant formation. So we have something I wanted to point out to you. So we went over. All right, let's go back here a second. I apologize. I just want to make sure that we hit all the important criteria here. So we did the breakout, the 9:30 open. All right. I want to stress about the importance of taking most of these trades off the same day. That is the key to making money. Taking these things off the same day. I know that's the tricky part. All right, so let's jump back up here now because we've got some new things to show you. So if we do have that pop and it doesn't pull back to the 20 period moving average, it'll tend to what we call a pennant formation. Now I can't put a pennant in here right here, but this is a good example of a pennant right here. You see that BGX? I think I have a better picture of it maybe, or I have some other ones. All right, RDW here. We took this trade actually. Took this trade, had a nice trade on it, and I talked everyone through this. I said, oh, there's a nice wedge pattern, pennant formation. We're going to call this, not a wedge. We're a nice pennant formation here, very strong. It hasn't pulled back to the 20. If it's not pulling back to the 20 and it's giving us this nice little, what we call a pennant, Pennants with cheap stocks tend to work really well. Momentum was strong. This was really holding off the 20-period moving average. The key here is the strength off the 20. It hasn't even touched the 20. So seeing the pennant even before the 20 is a good shot. It wasn't even going to pull back to the 20. It was going to break out of the pennant to the upside. Now we ended up taking trades on that. Pennant formation is a great setup to consider when trading pre-market news, momentum stocks. In addition to the first pullback to the 20-period moving average, this would be the second setup I would focus on. All right. The pattern occurs when the stock price experiences a sharp move up or down and then consolidates in a symmetrical triangle before breaking out in the same direction as the initial move. If you're able to identify this pattern and its breakout direction, it can provide a clear entry point for trading momentum. So it's a good entry there. And again, these are cheap stocks. So a breakout of this could give you a good percentage move, 10, 20%. I've seen 30%, 40% coming out of pennant formations. QNCX. The news came out. I was able to identify the news early at 1 o'clock, and then it popped, and I saw this consolidation. Look at this. Look at this move. This thing probably went from 50 cents to $1 to $1.50. And this is another huge move. The percentage moves in this is just incredible. I bet this is probably like 50 cents. 200% mover. Anyway, another good example of that pennant. You see the pennant form, it's usually a sign of upcoming strength. Here's another one. And again, all happens in the pre-market session. So pre-market session, pennants, great. Oh, and I think that was the end of the little slideshow I have there. And I think that's going to be it. But I wanted to kind of get this out as a kind of a mini lesson, things to look for. We'll go. Let's go back here and just review one last thing. I want to just kind of end on this note. News, number one. Come in. The news is going to give us the volume and it's going to give us the percentage moves. Oh, the one thing I wanted to show you, almost forgot. I want to show you my scanner. Let's do that. All right, when you come in and you're watching the show in the morning, you'll see this little box over here with some check marks in it, and it'll be called low float flyers. And typically I'll have the ES here, but if I'm actually looking at individual stocks, this will show up on the screen too. But you'll always see this scanner. And in the morning, it'll start filling up. I have it on automatic real time. So if I put it on real time, it'll automatically refresh and kind of keep it updated as I get, from 4 o'clock in the morning till whenever I get in, and then I start covering them. But you should be able to get them at 4 o'clock in the morning. I also set up a little check mark, which I keep, and if a stock ends up on this list and the check mark is green, that means it's trading at the highs of the session. So it's a good indication of stocks that are trading or breaking out and trading at the highs of the session. All right. So what is the criteria and I'm using TC2000 platform. Now, if you have your own platform, that's fine. You just have to find the right indicators and set it up the same way. And I'll show you my scanner right now. All right, so criteria, it's called low flow flyers. And again, I have this on the codes side, on the page with the codes. So if you're a lifetime member, you get all these codes. So if you have I have the template page with the Rockbot codes. So the Rockbot codes comes with all the TC2000 templates too, for those lifetime members here. So the float, I have is between 0 and I think I had 5 million here. This doesn't work that great on this TC2000. I don't know why, but it seems sometimes they give me bigger floats. Maybe it doesn't update the float. What I typically do is do a search after it's not the most important thing, but that's what I would have it scanning for: a float under 5 million shares. Price history. It's going to be less than $10. All right. I used to have it less than $5, but I found out that even the little bit more expensive ones, if they're up over 30%, they tend to move really good. So I don't get too many that are up over $5 on this list, as you can see over here. $1, $2, $6, $4, $3, $3, $3, $3. These are perfect time. Up 30%, 30%, 30, up 90%. iBio, up 50%. And then it has the float here. But all right, so price has to be under $10. You could set that to $5. Price history. This is the important part. It already has to be moving up a percentage. The percentage up about 25. I think I had it. It's at 24.5%. It could be 25%. Sometimes I can put it to 20%. The lower it is, the more stocks you'll get on your list. I like to get really good strength on it, so I'm just keeping it like that. But you can put whatever you want, and that's basically it. That gives me an early look at stocks that are moving up, that have a good move. I'll be able to actually do a volume, a sort here just by clicking on the volume, and the volume will sort itself, and I can have the highest volume ones that fit the criteria there. So if I go there, watch, and I click on that, then my volume, like iBio's leading volume here. You can see a lot of these popped up. And you see what happens? You get that pop and the drift. The pop and the drift. You have to be careful on most of these. Outlet. That's going to actually be one that's setting up for next week. All right. Well, anyway, that is the scan. I wanted to show you that scan. Hope you got to see that a bit. Now you can tighten this up if you have the TC2000. You could add different criteria. But this is a good one. This is the one I keep running on the site. All right. I think we'll finish up there. This would be considered a good cheat sheet, and it's not a technique for everyone, so just be careful with it. It does give you great percentage gains. Again, the news, that catalyst is going to be the most important part of this. The volume will be the second biggest part of this, and just make sure you take the trade off before the end of the day, because 80% of these pull back. And again, buy off the first pullback to the 20-period moving average when there's good news, and buy on a breakout of the pre-market highs. All right. Have a good day. See you guys in the market.